Welcome back to The Global Shift, where tonight we're diving into something absolutely fascinating: sophisticated market forecasts predicting the Dow's next moves. Yes, that's right. While most financial analysts are still debating whether stocks go up or down, truly groundbreaking stuff, we've been analysing patterns that suggest this market has more plot twists ahead than a telenovela with budget problems. Our analysis at Global Shift is suggesting something fascinating about the Dow, which is up nearly 5% year to date. We're seeing that this isn't the big market top everyone's freaking out about. In fact, the market rarely gives you multiple chances to sell the high. It's like your ex texting you at 2 a.m. If they do it 4 times in a row, they're not really saying goodbye. According to our research, we're looking at a bumpy ride through spring, with things potentially getting spicier in the summer. But here's the kicker: this isn't the end of the bull market. It's just a correction before things potentially go much higher. It's like when your GPS says recalculating after you miss a turn, you're still going to grandma's house, just with a slight detour through a sketchy neighbourhood. This is Gerald, our financial analysis pigeon. Gerald has successfully predicted 47 of the last 3 market crashes and currently keeps his seed money in 6 different currencies. Even Gerald thinks this summer might be a good time to go shopping in the market. And he once tried to build a nest out of shredded stock certificates during the 2008 financial crisis. The really interesting part? Our models suggest the Dow could reach dramatically higher levels in 2026. We're talking the kind of move that would make Bitcoin enthusiasts say, "That seems a bit excessive." It's like watching your conservative uncle who always complained about your spending habits suddenly buying a convertible and dating 3 women at once. So here's the simple version. Spring might be bumpy. Summer could get bumpier. But after that, the market might just decide to party like it's 1999, except with better technology and fewer concerns about Y2K. Look, I'm not saying these forecasts are guaranteed. For all I know, they could be as accurate as a weather forecast for next Christmas. But there's something both fascinating and hilarious about how markets move in patterns that seem to repeat just often enough to make us think we understand them, but not often enough to actually make consistent money. The good news is that if you're confused by all this, you're not alone. Even professional traders look at these projections the way dogs look at magic tricks, vaguely concerned and not entirely sure if they should be impressed or terrified. Before we go, a quick update on Gerald the Depression Pigeon. After reviewing these market projections, Gerald has decided to save some seed money for summer shopping. When asked for comment on the market forecast, he just stared blankly at the camera before attempting to build a tiny chart out of twigs, which, to be fair, is probably as valid a market visualization as any other. Join us next week when we'll explain the Federal Reserve's interest rate policy using nothing but a seesaw, 3 blindfolded economists, and Gerald's interpretive dance titled Jerome Powell's Existential Crisis. Until then, remember what Gerald always says: the market can remain irrational longer than you can remain solvent, but at least breadcrumbs never crash. And hey there, viewer, check out the Global Money Puzzle on Amazon with the link below in the description. And why not smash that subscribe button for The Global Shift? We're bringing you these financial insights weekly, with just enough humour to prevent you from hiding under your bed with your emergency gold coins. Gerald insists that subscribing is statistically correlated with better investment returns. And who am I to argue with a bird who wears tiny economist glasses?